All right, let's go ahead and get started here. I'm glad everyone could join us today for our webinar, The Most Overlooked Indicator. We're excited to have you all here and definitely excited to have Mr. Roy Swanson giving us a little bit of tour into his methodology today. As per all of our webinars, we do have to kind of get the legalities out of the way first. So I'll go ahead and read you the disclaimer here. This demonstration is designed to instruct you in using MetaStock and accompanying software plugins, and are not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investments decisions based on the use of their software, any trading strategies, or information provided in connection with the company. Now that we got that out of the way, let's get a little bit more background on our speaker today, Mr. Roy Swanson. The host, Roy Swanson, is a veteran trader and a math geek. He started trading at the dawn of the online brokerage era and was even asked by DL&J if he wanted to work on derivatives back when they first became popular in the late 1990s. Roy has consulted for some of the best known names in the trading strategy world, and he still does. Last year, he decided it was time to turn his no-nonsense professional approach to trading into tools that average traders could actually use. So without too much further ado here, I'm going to go ahead and turn the time over to Mr. Roy Swanson. We'll be here answering questions. So if you do have questions, feel free to just put them in that question panel, and we'll go ahead and answer those for you. So I'll turn the time over to Roy now.
Thanks, Hunter. Can you hear me?
I can, yes.
Good. If you can hear me, let's hope everyone else can too. Well, thanks for the intro, and thanks everyone for coming. Let's just pull all this up here. We're going to have, I think, a fun time today because this is an easy skill that you can use in MetaStock for a number of different scans that you may be running. That's why I call it the #1 most useful indicator in MetaStock. So let's get going. Hunter read the disclaimer. We all have to flash it, but since Hunter read it, I think we're okay. Just want to reiterate that we're not brokers or certified financial planners, and all the results here are illustrations based on simulated historical trade results. Past performance on this or any trading system is not indicative of future performance, and that is really the key one. We're going to get to that in a minute. Who I am, I think Hunter went through that. Been consulting in this industry for over a dozen years. Last year, about a year and a half ago, founded Steady Trader to put some of my own work out there. Talked about the fact that I was asked to work on derivatives. Hunter was gracious. I said no. I didn't know enough about them back then. They were really pretty new, but they obviously went on to be big. One of the things I've learned being a consultant to trading system providers, though, is the strengths and weaknesses of trading methods. And why even good traders and well-intentioned traders have trouble even with good systems. So we'll talk a little bit about that today as well. The agenda today is, again, the most useful indicator that I find in MetaStock. We're going to start with a little talk about using charts and chartings, what drives price, and I will reveal the indicator with a little fanfare. At the end, I do encourage you to stay, and I want to tell you how to get a free copy of my ebook that's on Amazon, but we're giving it away free at the end of the presentation. It's called Read This First Before You Buy Stocks. We did quite a bit of research about how the stock market has fundamentally changed in the last, really this is not a new change, in the last 10 years or so. There's been fundamental changes from technology and just the structure and the architecture of the markets. And yet, I would still hazard to say that 80% of individual traders are trading on methodologies and strategies that are based in the last century, the 20th century, which is it's a long time ago at this point. So it's a good, quick read, and I hope you stay around and tell you how to download that. So let's get going. A word about charts. And I just want to repeat the disclaimer that we see everywhere in this field, which is that past performance is not an indicator of future results. This is actually a federal regulation. It was put out there for good reason, because it's true. And this is why everyone has to repeat it everywhere. And yet, we all, I mean myself included, we all love charts, and charts look back. I mean, charts basically look backwards. You can extrapolate out to the future, but a chart in its inherent form is looking back at data. And when you consider that past performance is not an indicator of future results, it really makes you start to question how to make charts actually work as an indicator. Now, most charting techniques are based on extrapolation. I think most of you would know what that is if you're using MetaStock, just sort of extending the curve of what you see on the chart pattern so far. Most charting techniques work on using many past periods to develop a baseline that is theoretically or hypothetically more accurate. Charting techniques are based on patterns, but again, all of these things we see in charts are from the past. The patterns in the past, the extrapolation is based on the past, and all charts can do is project past results. So what about now? This is the question that I've wrestled with, I'm sure you've wrestled with, we all wrestle with. What about current performance? We've got all the charts in the world for past performance. What about current performance? Well, we have the order book. The order book is about now. The order book is basically the list, the manifest of orders on the books right now, people who want to buy and sell the stock or the ETF you're interested in. And the order book is important because when you get to the root of stock pricing, prices move for one reason only. It's not the news, it's not the Fed rate increase, it's not what's going on in Europe or in China the day before, it's not a company press release or an earnings call. Prices move because of auction pressure. This stock market we have is an auction. We should never forget that. And auctions are based on the price and the volume. How many people are bidding what price for the object? In this case, it's a stock or an ETF, or an option, whatever. How many people, the volume, are bidding what price? That's it. It's the only reason. All these other things people dwell on, such as the news of the day and company news and geopolitical events, those are certainly factors that then weigh in on the auction pressure. But if we're looking about what's going on right now, it's price and volume in the auction. They define the price. They always have. They will in the future. When you think about an auction, like an art auction or an auction for antiques, you can feel the momentum if you're physically there. It's electric. If you haven't been to an auction, I'm sure you've seen movies of it. And floor traders certainly feel it. We, sitting at home at our computers, we have the order book. It's our best read at what's going on in the auction. So how do we measure this momentum at the auction? You know, at an auction, value is everything. We want to make sure that whatever we're bidding on has a real value. And is that value going to appreciate in the future, or is it going to depreciate? Isn't that what it's all about at the end of the day? So rising bid prices, the price, that speaks to something good about the value of what we're looking at. And if there are many bidders, again, volume. It's always price and volume. It's all about risk, though, when you think about it. We're not only defining the value of the stock that we're looking at, or defining its price in a sense, but by looking at the volume with the price and which way that pressure is moving, this really can be an indicator of whether or not this thing we're buying at auction, the stock or this ETF, these shares, is it a good risk or is it a bad risk? Is it a good value? Will the value appreciate or will it not? It's all about risk. You can read the momentum using the order book. Active traders have used it for years, for decades. Market makers, day traders stare at the order book. Individual traders often tend to ignore it, and it's easy to see why. But let's remember, the order book is important. On any stock summary, any quote you get anywhere, I don't care where it is. This happens to be Yahoo. We like to use Yahoo Finance. The order book is right here. It's always one of the top line numbers. You've got the bids and the asks, and you've got the volume and the average volume. They're right there on the first most top line summary of anything to do with a stock you might be looking at. It's important and it's real. It's not a projection. Here's why people don't necessarily use the order book, because when you actually look at it, and mostly you just see the top few lines of the order book, it's a lot of numbers, easy to glaze over. To really figure out what's going on, you have to multiply the price by the size, look at the numbers, and who's going to do that. So it's real, it's not a projection, but it's not necessarily easy to interpret or interpolate or project. Order book data is often called level 2, and there's a reason they call it level 2, because once you start using the order book, in our opinion, you start to become a level 2 trader. You're a level above most traders, because you're actually looking at what's really going on. What's really going on at the auction that we call the stock market. So here's the indicator. No drum roll. I'll just flip right to it. There's an indicator in MetaStock called the on-balance volume indicator. And by our reading, it's the most valuable MetaStock indicator because it summarizes the order book. It summarizes this auction pressure for you. And it does it in a way that's very easy. This is what it looks like. You can put it on any chart. Here's a screenshot of MetaStock. The on-balance volume here, you just drag it down onto whatever chart you're looking at. And basically, we use it as the last overlay on any decision we're going to make to see what's going on with the auction pressure. If the slope is steep, and by that we mean better than a 45-degree angle, like in the case of this one, we feel that there's a lot of good pressure. There's pressure to raise the price. Remember, this is price and volume. So when this line is steep, it means a lot of people are bidding up this stock. And as you can see, it basically correlates with what's happening with the price. So we look for a slope of 45 degrees or steeper. We also look for a change in the slope and compare the slope to past moves. So let's just go back here. When there's a change in the slope, that's something to look for. Here you can see there was a change in the slope. So if you're sitting on this position here on this day and you see that at the close, what you would see basically is right here, you would see that the on-balance volume really took a dive. You know what? It's probably time to get out in the short term. And indeed, the stock does go lower the next day. So we look for changes in the slope and we look for comparison to past moves. We use it to validate our buy signals. We want to see that line in sync with whatever the buy signal is. We use it to signal our exits. I'll show you that in the next slide. And again, you can use it with just about any system. I mean, if at the end of the day you've got a system that's giving you a signal, you chart it out, you can throw this indicator right on top of it, and you can just use it as the last corroborating indicator with whatever you're doing. And that's what we call it, the last corroborating input. We have found that using it increases our accuracy by at least 10%, and I encourage you to try it yourself, see what happens in your own trading. So here's another chart, another actual trade from one of the trades we've taken recently on Rackspace. You can see we got a buy signal. This happens to be an RMO buy signal out of MetaStock from the swing trade RMO expert advisor. And so you're sitting there looking at the signal, and what you would see on the day of the actual signal is you wouldn't see anything past the signal to the right of it, but what you would see is that the on-balance was at this slope, and it actually got a little steeper the day of the signal. So you know what? That makes me think this is a good signal. This stock is actually increasing its auction pressure. And then you sit on the stock for a couple, And so the question comes a few days later, do I want to stay in this position? You're sitting here on this day, I don't know what this is, day 6 or something. Do I want to get out of this stock? Well, throw on your OBV and you can see, you know, we just took almost a plateau. We took a very slight drop today. Is it worth getting out? Well, when you see that the slope here has changed so much, it's completely reverse direction, I'm out. If it's late in the day, I'm out at the open. And it would be a good thing to get out at the open the next day because, again, the stock, erased half of its gains in the next couple of days. So this is an example, again, of how you can use it to not only validate the entry here, because the slope was actually increasing and it was a very nice steep slope, but when the line reverses and you've had a day where the stock just sort of stopped going up, you say to yourself, is this really going to start falling? Well, the OBV says, looks like it is. And again, it can really be useful in timing your exits like that. So let's just go over to MetaStock real briefly. Again, this is a very simple exercise. Here's another trade we took a few weeks ago, CSH, Cash America. Show you how to do it. It's very easy. This is an RMO buying signal again. I just pull the indicator down. We'll make it green because everyone likes green better than red. We'll make it nice and thick. We'll overlay it. And here you go. Once again, you see the same kind of thing going on here as in the last slide. We have this buy signal here. Am I going to take it? Well, with a slope like that, that's a very nice corroborating indicator. Why not? And sure enough, this stock took a very, very nice ride up from about 31 to 35 in just 3 days. You're looking at close to 8% easy gain. Once again, you come to this point here a few days out into the trade, and looks like the run is stalling. Is it stalling? Is it going to go up again? Is it going to go down? What am I going to do? Well, sitting here this night, you would see that the on-balance indicator has taken a very steep drop. It's almost as steeply going down as it was going up. And look what happened the next couple of days. You start to lose your gains. So again, the point is, when you see that, it can be a great signal to just get out at the open, preserve most of your gain. If you followed the signal here for your exit, you basically got to get out at the open and you would have preserved, looks like at least 85, 88% of the gain of this nice little 8-10% run up. Not a bad trade for a few days. It's that simple. This is not a complex presentation. We're getting back to basics. The on-balance volume is basic. You overlay it on a chart. You see if money is either going into a stock, going out of the stock. You see if the auction is if it's going with the issue or against it. It's really pretty cut and dried. It's almost embarrassingly so, but you know what? Sometimes the simple things really work. We use it to take the right buy signals. We have a system that we call the Greenlight trading strategy, which you can find on our site. We use 3 indicators. We use RMO, we use Wilder equations. At the very last step, we throw the on-balance volume indicator. And this is what I was talking about, using it with multiple indicators. This just happens to be how we use it. And one of the things we like about it is most other indicators are kind of complex, or at least they're a formula. And most other indicators, they go back quite a few periods. Some go back 50 periods or 30 periods or who knows, whatever, but they go back into the past. All these other indicators, just like charts, oscillators, they need to go back into the past to get their data. We look at the on-balance volume at the last second there. Last thing we look at, it's immediate. It's what's happening today. What is the sign today? It rates it. It's pretty easy to see. Is it going up steep or down steep? It's a direct, I call it a direct measurement, even though it's obviously not a purely direct measurement. It's about as close to it as you can think of, and it shows the price and the volume related to a line. So again, we like to use it with other indicators because the OBV is simple. Simple, it's direct, and it's immediate. These are the 3 things we like about it, and it's It really separates it from most other indicators, because most indicators and oscillators are going to need to reach back into time. As we say at the very beginning, they reach back into time to get their information, to make their interpretations. The OBV, you just have to look back one day. What happened today? It's not even looking back the way we look at it. So just to summarize, the OBV is about now. It's a direct measurement. It's not a projection. It shows which buy signals are the strongest, and it makes it easier to be a level 2 trader. We think it has an awful lot going for it. We use it all the time. We use it as it's the last thing we look at on any trade. And that's about it. I want to thank everyone for coming. I'll be looking at the question window now. And I know this is very simple, but sometimes the simple things are the most powerful. You can go to steadytrader.com. That's our website. And you'll see a link there for the book. Read this first before you buy stock. Just click on that. You can download the book. It talks about some of the research that went into this. It does have a chapter or two on the order book and why it's so important. Here we're talking about how MetaStock makes it easy to read the order book. And you can send me an email, info@steadytrader.com, if you have questions about the presentation, want me to email to you, or call this number at the screen, or visit the website for more information. Just make it simple for you here. Just these three ways to get in touch with us if you do have questions or want to follow up on this. That's it. This is a simple one. I will look at the question window now, the chat window, and if you have your questions, I'll start to answer them.
Thank you so much, Roy, for the presentation. It was great. I love the simplicity of it, and a lot of times traders really need to get back to that simplicity.
I know everything is so arcane and obtuse. Hey, Hunter, I don't have a question window in my. I only have the chat window, so I might not be seeing the questions.
Interesting. Okay.
GoToMeeting did not give me the question window, so if you
did?
want to read them to me or something.
Sure.
It's not here.
Let me. It'd probably be easier if I just read them to you.
Yeah.
Does having the OBV line above or below the price mean something?
No. It's just the slope of the line. Is it going up steeply? We'll get back to this here. You just look at the slope. There are different options to put it on. You can put it on with a scale or this or that. But let's remember, charts are visuals. A chart is a visual representation of what's going on with numbers. And this, here in this section here, you've got a very steep slope. That's going up very steeply. And that means good. That means there's a lot of positive auction pressure. This one, when it starts going down, steep slope down, negative. People are getting out. The money's running out of that issue. Very, very simple.
Okay, quite a few questions coming in here, so I'm going to try to pick out a few. Let's see. Frank, what does the RMO stand for? Rahul Mahinder Oscillator. It's actually one of the systems that is built within MetaStock to start with. Roy, you use that quite often, don't you?
Yeah, we use it in our system. As I mentioned, it's our own system we call Greenlight. We use RMO, Wilder, and On Balance together. We use the three of them together and overlay this at the end. But we're big fans of RMO. I know MetaStock has had it for years. By our lights, it's really one of the best oscillators out there.
Yeah, it really is. I can agree with you on that. Very simple system to use, especially when you start combining other methodologies into it. Let's see. Do you use OBV or OBV weighted?
I just use straight OBV right here on balance volume. Pull it right down.
Okay.
I'm making a note. Maybe I should look, and maybe there's something more more esoteric I can find in MetaStock. Tell me, Hunter.
We'll talk about that later.
But anyway,
we love keeping it simple. We love keeping it simple.
This is about simplicity, and that's why I love giving this presentation.
Sure.
Because back in the day, this is all anyone ever had, right? Floor traders at the auction, that's all you had. Their job was to sense the pulse of what's going on the floor. Well, we use this. we use this little line, the OBV line.
Richard, it is being recorded. This webinar will it'll also be posted on YouTube. Charles, yes, it does work on all time frames. Roy, maybe you can elaborate on the time frames that you use this system within. Has it pretty much covered all?
Yeah, and again, you can see each bar here is obviously a day. We use it particularly for the last day, as I said, because all these other indicators and oscillators, they go back whatever, 2, 4, 5, 10, 50 periods, whatever you're using. So to balance out our strategy, I like to just look at the last day, or here when I'm getting out. What happened today? So is this really a softening? And when you see that the price is flattened and the line starts to dive, yeah, this is more than just a plateau. This is, this is moving down. So I tend to just look at the last day. If I see something, a pattern like the last 2 days, and it's getting steeper and steeper over the last couple of days, that's great. But again, keeping it simple, I just want to see what's happening today, because the buy signal comes out for tonight, and I'm just trying to validate that in the most immediate reading I can.
Wonderful, and we'll get to one more question here by Yanis. Can you specify the relative number of periods for each of immediate, short, and medium? I believe that's time frames.
Well, we use the RMO. That goes back a few weeks, the way we use it. Wilder, we really keep Wilder reined into just the last few days, somewhere between the last 3 to 7 days, and then we use on balance for today. What happened today in the last session? So again, we're just trying to use each indicator and use each indicator to sort of ratchet down and tighten up what this signal is all about. Because again, with most oscillators and signals, you do have to reach back to get the signal to actually read. But with the OBV, you can just say, "Oh, this is what happened today."
Great. Well, we'll wrap it up there. Again, Roy, I appreciate you speaking today. Wonderful presentation. If anyone there in the audience has any questions, please go to steadytrader.com or email info@steadytrader.com. Also, we will be here at MetaStock to answer any questions. Just refer to the Steady Trader webinar that you just watched. And we'll, like I said, go ahead and wrap it up here. So again, thanks, Roy. And for all you out there,